Hi everyone, today let's start off by talking about US markets outperforming the rest of the world. Then we'll get into all the usual data as well as my current positions going into the start of the week. Do me a quick favor and like and subscribe to help out the channel, and let's get started. So looking at US stocks, you can see we've been outperforming since basically 2011. Anytime the blue is above that zero line, that is the US markets outperforming. And since basically 2011, we have been above that line. So continuing to outperform. This is the longest stretch that it's happened. You can see around 1991, we had a run all the way up until around 2004. And then we started to underperform into the Great Financial Crisis. Once we recovered from that, then we had outperformance. So it seems like it's bound to roll down at some point. Obviously, this doesn't give you any kind of timing, but it is interesting. And you can see S&P 500 over the MSCI is your blue, and then above emerging markets is this kind of lighter brown. So the data there starts around 1993. Even there, we've been outperforming since a little bit after. It looks like 2012, 2013 or so. So just keep it in mind. It's kind of interesting data. I thought it was interesting to me at least. And they do highlight in the article, of course, the US has had some of the best companies in the world during that time period. And it's hard to argue US tech as well as the chip market is not the best in the world. It's definitely the best in the world right now. But then they mention here, economic storms do happen and other markets move to their own economic rhythms. So just keep it in the back of your mind. There might be some opportunity in different markets. I've heard the European Union is significantly cheaper relative to the United States, so something to keep in mind. Moving over to market sentiment, starting with fear and greed, everything continues to be in extreme greed except for breadth. Breadth continues to hover in regular greed. And then volatility is at neutral, so nothing crazy there. Bonds still in extreme greed. This really has not shifted very much. Moving over to the AAII survey, we did get a little bit of a step up here in bullishness. We had a pretty significant drop down from February 7th to February 14th, down to 42%, and then we stepped up a little bit here to 44. Bulls pulled back a little bit, neutral pulled back a little bit, nothing crazy. Neutral still hovering pretty close to historical averages. Bulls well above, bears well below. So still a lot of bullishness in markets. Typically when you get this bullish and you start to pull back, that is not a great indicator, but markets really haven't pulled back as strongly as you would expect. You can see we were at 49, pretty extended, just below the 1-year high at 52. We've pulled back, and usually that's kind of a trigger to know that potentially there's some bearishness coming in markets, but it just really hasn't come to fruition quite yet. Moving over to seasonality, you can see we are in an election year, so that means we should generally be flat here for the NASDAQ and pretty much the same here for the Russell the rest of the month. Historically, the second half of February is quite bearish, but it does tend to hold up a little better in election years. And obviously we've had the run from NVIDIA, so we're definitely not in a historical average type of year, but just keep this in mind. And then moving over to the March data, we did get the March data here, it finally published. And you can see there's typically a dip into the beginning of March. That kind of flows from that weakness in the second half of February, follows through here into the beginning of March, and then mid-March you tend to get that bottoming. Then you get a little bit of a bounce or a potential rally here historically. So election years, again, dip low, sideways chop. Non-election years and overall you do tend to get a bit of a rally into this second half of March. So seasonality, bearish right now overall. Moving over to earnings, we're not quite done with earnings. Berkshire did report over the weekend. They did very well. Domino's Pizza, I do like that company, partly because of the stock and also because of the pizza. And then looking at Tuesday, you got Lowe's, American Tower, always very interesting. eBay, fun to watch. Then looking at Wednesday, you have Salesforce, TJ Maxx, Monster Beverage, always fun to watch also. And then looking at Thursday, Autodesk can be one of those high flyers, moves quite a bit typically on earnings. And that'll wrap it up for this earnings week. Moving over to the economic calendar, we do have a lot this week. It was a little bit soft last week in terms of the amount of data. This week, not so much. You start off with new home sales on Monday. Tuesday, core durable goods is the main one, as well as consumer confidence here at 10 o'clock. 7-year note auction, always interesting. Wednesday, you have GDP, obviously going to affect markets quite a lot. And then looking at Thursday, it does not slow down. You have PCE data, core and headline. Inflation has been hot. And if we get another hot inflation data point, I think that that's going to be quite bearish for markets. You also have pending home sales, always interesting, as well as Chicago PMI. And then looking at Friday, we do have global U.S. manufacturing PMI, ISM manufacturing PMI, ISM manufacturing prices. Prices always going to be interesting to watch here. And then the Michigan data for inflation as well as consumer sentiment. These have mattered more recently. I think I mentioned that just about every time, but I am definitely going to be looking at this inflation data, and you can see here 1-year inflation expectations actually expected to step up to 3% from 2.9, not a great indicator. And then the 5-year inflation data is expected to be flat from current inflation all the way to 5 years from now. So that's going to be interesting. And I wonder how that's going to affect markets over the next 5 years. I would expect the Fed would have to keep rates higher if we did continue to hover near that 3% area. Moving over to Max Payne, look at this massive call strike, 116,000 at the 500 strike. That is massive. And then you have 68,000 here at 508, just above current price. To me, this is massively bearish. That would tell me that we're going to close below 500 on the week, which again does fit with seasonality, but last week was also supposed to be quite bearish, and there was a big call strike at 502, and we ended up closing well above that, as you can see with the stock price. So keep in mind 500, massive call strike, tons and tons of options at that level, especially for an off week. You can see there's only 120,000 total options in the market here for the SPY, and 116,000 of those are on the 500 strike. So keep that in mind. This definitely looks bearish to me. And if what we saw at the end of the Friday session follows through into the Monday, we could see a quite bearish week overall. Moving over to the charts, starting off here with the S&Ps, you can see we've been in this upward channel. We hit the lower channel last week and this week, and then we rallied right up to the next one. Overall, long-term channel, we did break out above this one here. Broke out on 5 February, pulled back the next week, and then broke out here again. So we are now at all-time highs again on a closing basis, well above all of the trend lines. On the longer time frame, now you just have this shorter term channel that we're trading in. So nothing really valuable here on the medium time frame. And then going over here to the SPX on the monthly chart. The month has not closed yet, but I did want to highlight still bullish momentum, still bullish RSI. So nothing changing there, but we did get above this long-term trend line, which was basically sitting at that 500 level. So we did get above it. Similarly, we got above it here in July of 21, chopped above it for a while and then broke down. And now we're back above that trend line once again. Go ahead and zoom out to give that trend some context. And you can see that trend here getting established in September of 97, got back above it, broke back below it here. Pretty important level. We don't tend to spend a lot of time above this level. The only time that we've been above it here is that .com bubble. So keep that in the back of your mind. We are very high in the trend. And it doesn't mean we can't go higher. We have been higher than this level, but usually in the medium term, we do see a rollover at some point. And then finishing up here with the daily chart, you can see we did gap higher on that Thursday session on NVIDIA. Gapped higher again, almost hit the trend line and then fell into the Friday session. And then I just want to highlight here on the hourly chart, you can see we did fall basically throughout Friday and then into the end of the session, that last candle, big bearish volume, big selling, and then we continued to fall after hours. That's what I was talking about. If we do see this continue a little bit lower here on the Monday session, could be looking for a close below that 500, which would be quite bearish from current levels, about 1.5% to 2% lower. Moving over to the NASDAQ, similar thesis, bullish candle, looks pretty clean. I do have a level here at 438. Momentum did start to fade a little bit. RSI did pull back a little bit, so that's not quite the same. Again, well above all the medium terms, still in this upward channel. And then looking at the hourly chart, like I mentioned before, you can see fell on the Friday session, sold off after hours. Let's look at it on the daily chart just to give a little bit of context there. And you can see we did hit that midline on the trend line, rallied up to it on Thursday, tried to overthrow it on Friday, and then sold off from that level. 9 EMA sitting at 432.22, and then I have a level here at 433.24. Seems like we're going to pull back to that lower trend line at a minimum, which would bring you down to 428.53 or so. Momentum, not super convincing. It is rolling to the bull side a little bit. RSI breaking down from the SMA, not super convincing. I would expect that to break down further. Moving over to the Russell here on the weekly chart, ended up down a little bit. We continue to throw wicks to this 204 area. Did it last week, pulled back, couldn't quite get higher there. So you got basically an inside candle, if not a little bit bearish here on the week. Momentum rolling over, RSI rolling over. So that looks a little bit weak going into this week. And then looking at support, you have the 90 MA down at 196.77, and then I have a level here 198.75. We did hold above that level, which was quite bullish after testing it. Again, remember seasonality. It's supposed to be sideways during this period, so it does make sense that we did get some sideways chop here. And then looking at the daily chart, you can see it here, pulled back, hit the 21, held, tried to rally up, stuck at the 9 EMA. Nothing convincing. Looks like sideways chop, consolidation. Let's look at the hourly chart, see if we did get selling. Definitely tried to rally up. Nothing super convincing on the selling side. You can see a bunch of EMAs here consolidated on current price. Makes sense with the sideways chop, and then momentum after hours. A little bit bearish, but nothing convincing. Moving over to the Dow, you can see here we did get a really strong week, 1.32%, again, well above all-time highs on a closing basis. And I'll show you on the shorter time frames, we saw a little bit of weakness, but everything on the longer time frame still says super bullish. Let's look at it here on the daily chart. You can see we did see sideways chop, and then we gapped up on NVIDIA, gapped up again on the follow-through session, pulled back a little bit, didn't quite get to the trend line. You can see we're chopping on these trend lines, pulled back. If this rally is going to continue, we should see a push up to 398.50 or 400, right in that range. Momentum's rolling up, could do it for sure. Could be just a short-term pullback, but right now this does look a little bit weaker relative to the most recent rallies. You can see here we just got straight up price action for many, many weeks. I don't think it's going to do that, but we did see a breakout on NVIDIA, and like I said, price target up around 398.50. Moving over to the equal weighted S&Ps, you can see we did get a breakout on the week, so that's very bullish, above 160.31, next level 164.87. Momentum bullish, RSI just about overbought, hit 98.81 on a closing basis, and that 164.87 level is your all-time high here on the equal weights. It is good to see the equal weights participating in this rally. They were participating early, but we were definitely not at all-time highs the way the other markets are. And then here we're getting very close to the all-time highs. It does seem like it could go higher here. Clear breakout, $2.87 of potential upside. Let's look at it on the daily chart. The only concerning thing to me on this chart is the fact that it did happen on the NVIDIA earnings. Not sure why NVIDIA is driving everything higher, but it seems to be that we're seeing everything rally higher on that move. Big rally Thursday, gapped higher and held, slightly bullish on that. Momentum bullish, RSI bullish, so looking pretty strong up to 164.87. Moving over to ratios, looking at the SPY Russell and NASDAQ SPY. SPY Russell did rally here, so we did see SPY outperformance after 2 weeks of underperformance. Makes sense. With NVIDIA, obviously NVIDIA is not going to influence the Russell 2000 nearly as much as the SPY. So big rally there, broke back above 252. If that continues here, 259, which would be that most recent high on this chart. And then zooming out here, you can see that is the most recent high going back quite a while. Let's go ahead and full screen that to give some context. The last time we were this high was your dot-com bubble here in the early 2000s. We got super, super high on this ratio, up to 3.35. I don't think we're going to go anywhere near that high on the S&Ps, but keep in mind that is the area that we are in right now. The other high was November of 90. We ended up pulling back quite a lot from that level. Dot-com bubble pulled back a lot from that level. Historically, we trade much, much lower than this, so just keep that in mind as we continue to go higher on this ratio. And then moving over here to the SPY NASDAQ, basically flat, did go a little bit lower, so NASDAQ underperformance, SPY outperforming at least a little bit in the short term. Moving over to SPY divided by the M2 money supply, you can see we are getting very, very close to my next level here at 24.49, just below it here at 24.28. And you can see, again, very similar to the last ratio. The last time we were at this level is going back here to June of 2001, and then we did hit it on the upside here in February of 98, dipped below it briefly in September of 98, stayed above it a long time here in 2000, and then eventually fell back into a normalized range. We've spent the majority of our time here between the 14 and 20 range. Anytime we get above these current levels, that is just a short-term stint. And when I say short-term, remember the dot-com bubble did take several years to materialize back to lower prices. But as of right now, we are continuing to rally. We did hit this trend line here this week, we did start to pull back a little bit from that trend line. It's a little bit ambiguous. You can see this trend line did mark a lot of highs here in 2014, overthrew it a couple of times in 18, as well as the pre-COVID high. Didn't quite get to that same level in November of 21, which was our previous all-time high. And obviously this is our current all-time high for regular markets. Obviously not on this ratio, but we are right there right now at a potential area of resistance. Might overthrow it a little bit, like I said, to that 24.48 level. But remember, markets showed a little bit of weakness in the end of the session. Let's see if it shows it here as well. On the hourly chart, you can see we got into that area, pulled back into the end of the session, ended up selling off into the end, momentum fading here. So very similar in terms of price action on this ratio, and this is a critical resistance in my opinion. Moving over to the Mag 7, I tried to give this some long-term context here on the weekly chart. You can see we are almost to that upper trend line. We hit that upper trend line in August of 21, overthrew it here in November of 21, and then pulled back all the way well below the lower trend line. I could probably add another one here to encompass those lows, but critical point there, I added a level at 128.18, and then you can see we are right at this short-term trend line. Hit that level, overthrew it a little bit, similar to what we saw here in July, potentially looking for a bit of a pullback down to that 308 area, which would be about a 10% move to the downside. Pretty interesting there as a potential. Otherwise, if it breaks here, your price target on the Mag 7 would be 382. And then last time we hit this area, you can see we did overthrow it a little bit. This is all-time highs here for the Mag 7, so I don't have anything above that level to see where it could go, but that's what we're looking at. At resistance, 10% down move possible, or potentially a move up to that 382 area, which would give you about 40 points or so of upside potential. So 10% plus or minus either way. Moving over to Apple and Tesla. Apple right at a critical point. You can see we hit this medium-term trend line here. Let's go ahead and zoom out on that so you can see it a little bit better. You can see we've been in this upward channel for a while. Broke down from here in May of 22, had a dip low in January of 23. Since then, it's been on a run. We're hitting this trend line, marks the top here in February of 20. Marks a low here in June of 22, consolidation here in November of 22, dipped that same low in October of 23. And then sure enough, we are at that critical point, touched it again, rallied back above 182.37. So Apple finding a little bit of strength, momentum bearish, RSI still bearish there. And then looking at Tesla, you can see bearish week, had two pretty strong weeks in a row after their week earnings candle, which was down almost 14%, rallied up a little bit, broke back down from 197.75. 188.50 is your current support. Let's look at that on the daily chart. It's a little bit different here. You can see we'd been trying to rally, tested that level multiple times, still holding the 21 EMA, momentum fading, RSI fading a little bit, so that does not look as bullish as it did before. Really, out of the two, I think Apple's probably the better play off of that longer term trend support. Moving over to Microsoft and NVIDIA, you can see Microsoft and NVIDIA both having a bullish week. Microsoft 1.5%, NVIDIA 8.54%. Microsoft hitting trend resistance. You can see we overthrew that a little bit, then pulled back to it here. We'll see if we break down from that level or not. Could be a breakdown, retest, breakdown. Obviously, the trend is still bullish here. We are above all the EMAs and SMAs, still above, and they are in order, so keep that in mind. Momentum fading, RSI fading potentially here. Broke below the SMA, retesting, waiting to see if it breaks back down. And then NVIDIA, obviously, with their very strong earnings, continuing on this short-term trend, longer-term trend resistance up at 850 or so. Momentum bullish, RSI super overbought at 86.50, but who knows, it could absolutely go to that 850 area as your current price target. Momentum and RSI, like I said, super bullish. Moving over to staples on discretionary, both of these had a positive week, which is interesting. You don't typically see that 2.05% and then 1.27%. So Staples still outperforming. Got a level here at 57.40. We're in this short-term bullish trend. You can see the medium-term trend is still sideways consolidation. Had that dip low. We've been rallying since then back up into these most recent ranges. We're pretty much in the middle of that range right now. Like I said, 75.40 is your price target. Momentum bullish, RSI bullish. And then similarly here on the discretionaries, we are basically at a double top. We're waiting to see if this this breaks here. Next level 185.36, momentum bullish, RSI still bullish. All-time highs are up around 212, so we're pretty well off of that right now. Does seem possible that we could get into the 185.36 area. Above that, I have 189.39. If we start to test those levels, I'll throw some in here on this all-time high chop. Probably one here right at the top, one at the bottom of the consolidation. We'll see how that plays out. But right now, looks like a double top, waiting to see what happens. If we can continue to break here, like I said, 185.36. Moving over to industrials and utilities here, you can see industrials continues to break higher, 1.86% to the upside, broke above the trend line. Next trend resistance would be around that 123 area. Momentum bullish, RSI overbought, but still bullish. And then looking at utilities, I did pick utilities here as it was the top performer for sectors on the Friday session, and it was pretty bullish on the week, 1.19%. It's getting very close to VWAP. It is right at that 9 EMA at 62.64, just a little bit below that at 61.96. I have a level here, 62.89. Utilities has not been loved with the most recent rally and everything else, but we're definitely seeing a rotation into safer stocks, staples rallying, utilities rallying. If this breaks above 62.59, then you could see a push to 64.20, and then potentially all the way to that 55 EMA at 64.33, which could be a decent run. It is worth noting we're right at the SMA. You want to see that break, hold, and continue. Similar to the move we saw here. Got the break, didn't fully retest, but then we got continuation and price went much higher, all the way from 56.88 up to that 65.11 area. So pretty solid run. Seems like we have a higher low, looking for a bigger move higher to a higher high, maybe up to that 68.36 area. Moving over to breadth here on the 20 and the 50-day averages, you can see both of these were bullish on the week. We had some consolidation, dip lows, and now we're breaking back up into that 86.50 area. Seems like we're going to get there, momentum ticking towards bullish, RSI bullish, and then looking at the 50-day average, get to it a little bit closer here. You can see that wick low that we had last week, and then this week we had the big move higher. Momentum did not confirm it yet. RSI looking to retest that SMA. So we'll see what happens once we start getting into a little bit of resistance. I would expect to overthrow 68.66, hit that 77.46 area, and then we'll see if we get a lower high, retest the SMA on the RSI, and then break down from there. We'll see what happens, but right now both of these look bullish. Moving over to the 200-day breadth here, just for a moment, you can see we had a lot of weeks in a row of sideways chop, and then this week we did get a rally. Ended up closing on the high. Momentum didn't show the bullishness, but RSI definitely did. Got back above the SMA. Looking for that to push to 76.04. Then we'll see what happens. If we get into this zone and then break, we have 92.42. And then we could see a rally from current prices into these upper highs here on 200-day breadth. It's worth noting we did not hit extremes yet on this chart. That would be that 91.42 level. So we did see a really strong rally, break down slightly, and then we're starting to see a bit of a rally here. Like I said, we'll be watching it closely for that break. But if it double tops here, then we see another breakdown that could be quite bearish. Moving over to yields, I just wanted to highlight this from the Friday video. We saw weakness across yields. 2-year, not super weak, just hit resistance and pulled back slightly. But 10-year, pretty solid breakdown here after testing that 4.35 level. Continuing to watch those auctions to see what happens. But 10-year breaking down could be quite bullish for equities. And that was on the back of the Fed minutes this week. So that could have a little bit more follow through, potentially back down to that 4 level, which is interesting. We've continued to be inverted for a very long time. I thought we might see a reversion on this rally. Then still not impossible, but that Friday candle is pretty bearish. Moving over to the dollar here just for a moment, you can see we did get a low, higher low from that Thursday into the Friday, throwing some wicks to that 103.64 level. Looking for this to push back to 104.4, and if it does do that, that's going to be quite weak for equities. Let's go ahead and look at the weekly chart. We were bearish on the week, but momentum continues to stay bullish. Looks like a short-term pullback as long as that 103.64 level holds. Then we could see a rally up to 105.50. We'll see what happens from there. Momentum, like I said, super bullish still. And we're on that follow through. You would expect it to continue to the upside. And then you can see the most recent high here as well at 106.8. If we get into that region at all, that's going to be quite bearish. That was your most recent low here in October of 23. And then moving over to bonds here just for a moment, you can see J&K not doing much anything, continues to consolidate at this level. It's been here for a while now. Got here in December, sideways chop on J&K. TLT on the other hand continues to be in the short-term downtrend. Does kind of look like a bull flag, and it is holding at that 21-week moving average at 92.23. We tested that this week and then bounced pretty strongly. If this is a bull flag and it breaks out here from 94.46, that could give you a lot of upside. Honestly, it's been a very strong rally into this bull flag. So rally, bull flag, breakout could push you back up into that 108 area, which would be your most recent high here from April of 23. So keep that in mind. This is starting to show some bullishness. Hit the bottom of this trend that I had from the 16 January level. It's holding a higher low currently, potentially showing some bullishness on the weekly chart. Moving over to volatility, you can see move index breaking down a lot as bonds start to rally a little bit. And then looking at the VIX here, let's go to the weekly chart on the full screen. You can see we continue to hold higher lows. So we had a low, higher low, higher low. We continue to hold that momentum, still bullish on the weekly chart. We did not get a higher high this week, so it's been a little bit chopped. But zooming out here, you can see we definitely get chop on the VIX. You have a high, higher high, lower lows, pulled all the way back. And then we ended up rallying to much higher highs all the way up to that 38 area in January of 22. So keep in mind, this could absolutely go higher from current levels. It's been a little bit choppy recently, similar to what we saw here in June as well. Wick high, pulled back, wick high, pulled back, got a much higher high all the way up to that 23 area, and then we saw the strong rally. So we'll see what happens here. It's not impossible for this to go higher, but right now we're getting close to trend support, 9 EMA, pretty big pullback on the week, but still holding those higher lows like I said. Moving over to my accounts, I did lose money on the week. I was not set up for that rally on the NVIDIA earnings, so that hurt me pretty bad, unfortunately. Made a little bit of money on the Friday session, so that helped a little bit. But overall, I think I was still down about $1,000 or 1% on the week. Looking into next week in terms of current positions, still neutral here on the IWM, slight covered call up to 202 for 30 days, continuing to hold that. It's in a small loser right now, but potential profit, like I said, of about $2 or so on that position. And then looking at the triple Qs, I still have my covered call. I rolled this down on the Friday session to try to make up for that move down at the end of the session. So 436 here for a $1.69 credit. And like I said, you can see we were down below that 435.75 at the end of the session. So sold off really strong after hours. Went from 436.78, sold off $1 after hours, so about 0.25%. So pretty interesting there. And then you can see the longer time frame at 41 days, still holding a 422 put in a decent profit here already. And then 452 call. I rolled that down on the Friday session as I think we're going to see a little bit more bearishness next week, which does fit in with most of the charts that we saw so far. And then looking at the TQQs, I have a 55 call on my covered position here, and then a 58 put. Probably going to take that off on the Monday session and try to find a better spot to get back into that position. Otherwise, if we get below 55 here, then I'll just continue to trade the covered calls. We'll see how it plays out. I'm a little bit more bullish on the triple Qs than I wanted to be going into the end of the session. But right now, pretty neutral with a little bit of bullishness on the triple Qs despite that weak Friday session. Let me know down in the comment section what you think of potentially looking overseas for some opportunity, or is the United States still the place to be? Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.